Hello, everyone, and welcome to Out of the Box Technologies Tech Tuesday. Today's webinar on year-end planning with Vicki Newton. We're so happy that you joined us. Today's presenter, as I said, is our own Vicki Newton. Vicki has been with Out of the Box for more than 6 years in varying roles. She loves working and connecting with end users to better understand their accounting and bookkeeping needs. She's a veteran out-of-the-box technology presenter and is always a favorite. Her CV includes more than 40 years of accounting experience, so we encourage you to engage with Vicki with any questions that you might have. As for me, my name is Jeanette Schwartz-Rattan. I am the Director of Marketing here at Out of the Box Technology, and I will be your moderator for the day. Just a few housekeeping items before we get started. This session is being recorded. So we encourage you again to take your time, really engage and ask questions. The recording will be shared with you as a resource after the webinar along with the slide deck, and you can revisit any key points and information you'd like to review there. We will also have some time for questions at the end. So as we go through, if you're hoping to dig deeper into something that we cover and need some clarification, feel free to chat those questions to us and we can address those as we move through the presentation and at the end as well. We will be doing, we have a drawing for an Amazon gift card. The winner will be announced in our follow-up email along with the recording and slide deck. If you haven't had a chance, you can register to win at the link I just chatted out in the chat box. A little bit about Out of the Box Technology if you haven't joined us before, or maybe it's been a little bit. Here at Out of the Box Technology, we are anything and everything QuickBooks. Our growing team of over 50 QuickBooks certified consultants and service providers is your one-stop shop for your QuickBooks needs. From data services like migration projects to cloud hosting, bookkeeping, recurring accounting services, and other business services, our team is on hand for you. As an elite QuickBooks solution provider, we are able to offer you exclusive discounts and pricing, so be sure to connect with us before purchasing your QuickBooks solutions. With that, I believe I've covered all of our housekeeping items, and so I'm going to hand things off to Vicki so she can get started. Vicki, it's all yours.
Great. Good morning, everybody. It's October. Can we believe this? I can't believe it's October already. So this is the time of year when you got to start thinking about these things. So today we're going to talk about the steps that everyone should take when you're completing your year-end books, so that your CPAs have the most accurate information to submit your tax returns. And you'd be surprised how many people just submit what they have and it's not always accurate. And so it ends up having to be amended later, or you're paying too much tax or not enough. So these are all the steps that we go through when we're helping people clean up their year end to get ready for filing taxes in a timely manner. A lot of people filed later this year, so it kind of extended out through the year, but most people are at a fiscal year end for December 31st, but others also have different fiscal year ends. So you kind of have to think about, start looking into these things maybe a month or two ahead of time. Next slide. So normally with CPAs, they have what you call prior year adjustments. So when you send them your information, they're going to prepare your taxes. Most of them have entries that need to be posted to your books so that your books equal your tax returns. If you don't ask for them, sometimes they don't give them to you. So a lot of them don't have the ability to post themselves. So you have to do it. So they'll send them in a format where you can go in and post them. It's real important that those get posted before you submit your next year's book. So a lot of times we'll get into, say, cleaning up 23, and people haven't posted their 22 adjustments yet. So we want to make sure those things are done before moving on to clean up the current year. So don't forget to ask for those, because again, some CPAs don't provide them unless you ask for them. So your books are never in balance with what they're reporting on your taxes. Next slide. The reconciliations. This is a big part, and people sometimes don't understand. Well, my bank balance matches. Well, sometimes that doesn't mean that it's perfect. So this is really a report card for you to see how things are clearing through the bank, to make sure that there's not duplicate entries, to make sure that you didn't miss anything. So in both desktop and QBO, if you haven't used the reconcile function before, we can teach you how. It's really important. I'm adamant about doing these bank reconciliations and credit cards and loan reconciliations. Those can include any loans you have for equipment, loans you have for vehicles, because a lot of those type of loans have principal and interest that need to be broke out correctly so that your liability account matches what they are saying you still owe, and that your interest is recorded properly as an expense. So any of the accounts that, checking, savings, investment accounts, any of the credit cards, all of those things, I recommend they be done monthly. A lot of people won't get to them. They'll do 3 or 4 months at a time, and then they're having a hard time trying to make it work. So if you can put it on your schedule to do every month, and make sure you're clearing all items, then I would suggest you do that. Next slide. So if you haven't done it before, how to get to the reconcile function, this looks like the desktop version. So if you just go into banking and hit reconcile, and then you pick the account that you're going to reconcile, and you generally put in make sure your ending balance from the last statement is correct and your ending balance for the new statement, and you go in and you check off all the deposits and all the checks and make sure everything ties out to a 0 balance, and then you're done. Depending on what version you have within QuickBooks, QBO, or Desktop, QBO saves them all, but Desktop doesn't always save all the reconciliations unless you're on a higher version. So I recommend, if you don't have a version of Desktop that saves those in history, that you print them out so you have them to refer to. Another thing when you're reconciling with QBO is that you can actually attach your bank statement once you've reconciled, and in the history by account in QBO, it just allows you to drop a PDF file right into there. And so then everything's right there if you ever need to refer back to it. There's also a button on the desktop version that just says reconcile. If you don't use the menu, different people get to it different ways. Go ahead to the next one. So this kind of shows you uncleared transactions when you're clearing stuff, and this kind of gives you a future dates. I don't know why, but so when you're clearing items, say you're reconciling your end of year for 12/31/23, and you've got a bunch of stuff sitting in here from 22 and even early 23. That's a sign that something's not happening. Either that's a duplicate check, needs to be voided. Sometimes the people that you send the checks to don't necessarily get them. So we have to call and say, hey, did you get this? Because you want those things clearing. You don't want to leave a bunch of stuff. And I've had people never clear out their uncleared items the way they should, and they'll have a year's worth of stuff. And that throws your bank balance off, and it also throws your books off, because those are entries that are recorded in your books. And you sometimes they're even duplicates. So you got to look and see if it possibly is a duplicate, so you can delete the one that hasn't cleared. So it's really important that as you do this, you're looking at those items that aren't clearing, that are before the ending date. Next slide. Undeposited funds is a very challenging account for us and for our clients, because if you aren't taught how to do this correctly, it can create a lot of havoc within your books. So, excuse me, when you're receiving payments from customers, I always tell people, you're safest to just put it all in undeposited funds. Unless you know it's an ACH, it's a wire, then put it directly to the bank account. But when you do payments, it puts them in this account called undeposited funds. So then when you go to make your deposit, it's going to bring up a screen and show all those, and you're going to click everything that should go in that deposit. So the total deposit equals what actually went in the bank. So when it comes through, it matches. So you're going to, you have the ability to pick the bank account that you're depositing into. You can add line items to that once you've selected the payments, if you need to do a plus or minus to make it balance the deposit. But this is not an account you want to leave and have it continue to grow. I've seen people with stuff in here from 2 years prior. And what happens is, and I've seen this happen several times, is that people will receive payments in for invoices, but they don't ever process it to a deposit. So then when the deposit comes through, they go, oh, okay, well, then we'll just put that to income. So then what that means is you've double recognized income, because you've already recognized the invoice when you created in the payment, and now you're putting it in income again by not properly coding the deposits that's coming through to make sure that it matches what's in here. So undeposited funds is one of those accounts you want definitely to be a zero balance monthly, if not always at the end of the year. You want to make sure that that is zero. Go ahead. Okay. So after you reconcile, like I said, you need to make sure you're reviewing the old uncleared deposits and payments before hitting the done button. Some people will go ahead and hit done, then go back. But I recommend, if it says zero and you still got things up there, go in and look into them. Maybe you can clear them off before you do that. If you're going to have current year transactions before the reconciliation is complete that need to be voided, you can go ahead and get those voided in the current year. Now, some people close their books every month. So you don't necessarily want to go back and close something in a prior period. And in those cases, like from previous years, you've got to write a journal entry in order to offset clearing those out of your outstanding items. And those are things that we help people with all the time. Next slide. Okay. Customer deposit liability. Oh, we spelled that wrong, didn't we? Oh, okay, so when you have a client that pays you a deposit, sometimes people put that in what they call a customer deposit liability account. There's also methods that you can do other than that, because this can get kind of lost if it's not handled properly. But what you want to do is, if you have items in that liability account, you definitely want to go through and make sure that there was nothing there that needed to be moved. I recommend that there shouldn't be anything left at the end of the year. A lot of times CPAs will take that amount and they'll show it as a credit on accounts receivable at the end of the year, and then move it back in the following year. There really shouldn't be any negative amounts in a liability account. My preference for this is to, when you take a deposit from someone, a lot of times you can just put it into their accounts receivable and show it as a credit, and then it'll get applied when you actually create the invoices. So it really depends on how you like to see this. When you have accounts receivable, you can actually run schedules for that, and you can't do that with the customer deposit liability. You kind of have to go through and reconcile it. So it just depends on what you think is easier for you, and we're always happy to look over what your current situation is and recommend what we think that you should do. Yeah, that's about it for that one. Okay, next one. Sales tax. Oh, this is something that if you really don't understand it, it can get really crazy. So within sales tax for desktop and QBO, you have the ability to set up so that when you go to pay your sales tax, you go into the sales tax module and you can click which ones you're paying. There's a whole process to doing sales tax, because you generally want to run your reports for what you have to report. For me, I will go in, and most of these sales tax reports are done online, and they're never exact. Very seldom are they exactly what you owe. That's just due to little credits they might give you, or little extra charges, things like that. So you can make adjustments in the sales tax thing and then go pay your check, and it'll clear this out. the balance that's in the sales tax module should then equal what's on your balance sheet as sales tax payable. This is one of those things that really confuses people, and you have somebody walk you through it. If you're having issues with sales tax, I would suggest that you ask, for some help with that. If you are a company that has a lot of different sales taxes, jurisdictions that you have to report to, and you don't have, say, a e-commerce vendor doing it for you, then I would recommend looking into a third-party software like Avalara to help you, because they keep up with all the rules and the rates and make sure that your reports get filed on time and correctly. So it is something that can get out of hand, especially some people will pay their sales tax, and instead of doing it through the proper channel here, they'll just record it in as a check, and then it never clears everything out properly. So if this is something that you know that you do on a regular basis and you haven't been doing it correctly, let's make sure that you get trained on how to do that. And we do provide that kind of training. Next slide. Payroll liabilities. So payroll liabilities, if you're using the payroll modules, you want to make sure that these are getting cleared out on a timely fashion and that they're getting cleared out to zero. So there's a couple places that you can go. You can run your a report of liabilities. They should zero out at the end of the year. Make sure everything is clearing out the way it should, and you can pay them either through this pay liabilities, or there's actually a way to pay them and create custom payments so that you can click exactly which liabilities that you're paying. This is something that confuses people a lot too. They'll make a payment and not record it correctly in here, so it gets their payroll liabilities all out of whack. So again, this is another one of those areas that can be really, it can be time sensitive as well, because if you're doing reporting, you want to make sure that the liabilities are getting recorded correctly. We have a team of payroll specialists, and then most of us at the executive director level, even lower, can help with all of this. I'm actually working on a project right now that is cleaning up a bunch of their payroll liability issues. I'm a stickler for just keeping things clean, and that way we know the books are right. So if this is something you're struggling with, please let us know, and we'd be happy to help you with this as well. Next slide. So accounts receivable. If you look, there's a report that a lot of people don't know about called open invoices. And the open invoices schedule will show you what customers have invoices outstanding. Well, a lot of times, again, this is another one of those reports. I like to be very clean. I don't want a bunch of zeros. If you don't apply the payment to the invoice, it's going to show a plus and a minus with a zero balance. Well, and that invoice is not going to be shown as paid. So it'll show as old on your aging report. So if you go and run that report and you see there's a bunch of zeros, you need to go in and apply the payments to the invoices so that your accounts receivable is correct. The other thing we want to make sure of is that whatever is on your aging and whatever is on your open invoices equals the amount that shows on your balance sheet as your accounts receivable. Very rare does it get off, but it does, but it is something that you need to make sure balances. The other thing is that with payables, it's kind of the same premise. You want to make sure you've gone into your unpaid bills. There's a report called unpaid bills, and it'll show you what it shows you still owing, if there's been payments made. If there's zeros, it's the same type of deal. You want to go in and clean up those zeros so that your unpaid bills is correct. And when you go to pay bills, it's not got a whole bunch of stuff that doesn't belong there. So these are things that we help people with when we're doing projects, when we're doing cleanup at the end of the year, because it's not something a lot of people understand about. And so but it is important to make sure, because sometimes people will put things to, say, accounts payable, and it doesn't belong there. So it's sitting there as a debit on accounts payable, but there was never an invoice posted. So we got to clean those things up. So it's really important that you review those in detail, your accounts receivable and your accounts payable at the end of the year. The next slide is the aging. So this will tell you, this is like the AR aging report. This is going to tell you what's current and what's aged. So if you aren't applying the payments correctly, you may have something sitting in over 90 that shows still due, and then a credit way over here on current. So you want to make sure that this is a nice, clean, and easily understandable report. It works the same way with pay bills. We just want to make sure that we are, and again, this is going to balance when it's accrual basis. If it's cash basis on your balance sheet, it's not going to show these things because it doesn't reflect receivables and payables until they are actually received payment for or paid. So you got to make sure you run the accrual basis to tie those balances out. Next slide, please. So on QuickBooks Online, again, this talks about you didn't apply the payment against open invoices. Those are things that, you know, can create those problems, and you didn't make the deposit correctly, so you just accepted the bank download, and those are what have to be corrected so that you're not, I call it double dipping. So we don't want to double dip because that creates all sorts of problems for you. All right. So your cleanup list, there's different things that you want to look at. And this is, you know, these are not the most crucial things, but again, I'm a very thorough person when I look at things. So I'm always looking at the chart of accounts to make sure there's not stuff that was created that was an error that we need to either delete or inactivate. Make sure the account types are correct. Sometimes people may set up a second account that's actually already set up in the system. It might be a different name. You can merge those accounts together to make it nice and clean. The order that you have them in. I set up a lot of parent accounts for people. So when you have we call them header accounts as well. You have things that, for example, a lot of people want to see their details for, say, utilities. So utilities will be the parent account, and you'll have water, electricity, garbage are all sub accounts. So when you go to review your reports, you want to make sure nothing's in those header accounts, and it'll show as, say, utilities other, and that tells you it got posted to the header account. So you go in and make sure it's under the sub account. So your balance sheet and your P&L are very clean and tidy. There's items that having expense and income accounts reversed. We want to make sure that the items for recorded invoices are going to the right places. So if you're seeing any issues, a lot of times when I go to clean stuff up, I see how these items were set up incorrectly. So if you're seeing any issues there, but these are things we look at always when we're doing assessments on a file is are these items set up correctly? Go ahead. Okay, where are we at? Okay, account types. So in here, you can't change AP or AR accounts, but sometimes you have an account that maybe got set up. I have this happen all the time because people don't realize you got to tell it what kind of account you're setting up. So if you set up an expense account and you just do the default, it's going to set up as a cash account. Well, if stuff has been going there, we don't necessarily want to have to move all that to a new account. So if we know that account was just set up incorrectly, we can go in and edit it and change what account type it is so it shows correctly on the reports. So it's something that you can do for everything but AR and AP accounts. So if we see that when we're looking over chart of accounts, or a lot of times I just see it when I'm running the balance sheet, I'm like, that's not a cash account. Let's go fix that. So these are things you want to be careful of as well. If you aren't sure how to set up a new account or how to edit one, we can train you on that as well. Go ahead and go to the next one. When we talked about, whoops, where'd the merge? There it is, okay. So this is one of those things I was talking about earlier. If you have accounts that are similar, it may ask you that, would you like to merge them? See, it says electric and gas and electric. Well, if you know you want those all in one place, yes, go ahead and merge them, and it will do it for you. So it'll just take everything, both accounts, and put it under one. which makes it much simpler. I've seen people set up a second, a third bank account in error that they all belong in one place, so I have to merge them all together. So there is a way to merge transactions and accounts. There's a way to merge AR customers, AP customers, so forth. A lot of people don't really understand that part of it, but there is the ability to do that within your QuickBooks. Okay, next slide. So desktop is flexible and lets you drag accounts to where you want them. And you can click on the dot to left the name, and where you want it works on any list. QBO is alphabetical only, unless you use account numbers or add a number to put in that order. So if you are looking at your chart or list that you're like, I don't like the order that's in, can I change that? Let us know, and we can tell you whether it can be done, or walk you through how to do it. A lot of people, for me, I like looking at my chart of accounts in a certain order. I like looking at my balance sheet, and there's different formats there. And if you don't have them coded correctly, then it's going to be all over the place. And I have a lot of customers that are all over the place when I start working with them. So, but you do have flexibility there, and it's different when you're working in desktop versus QBO. Now, this is what I was talking about earlier. So parent accounts. So what's going to happen is you have job expenses is like your main thing. So then job materials, it's considered a header. Deck and patio, plant and sod are subs. Subcontractors is just its own account. Now, if it goes to job expenses other, that means that it got posted up here on this account, a header account. So this is a clue when you run the report to go, oh, okay, I need to fix that. So you can double click into the amount and see what the transactions are to move them to the right sub account. So whenever it says other at the bottom of a list of accounts, you want to make sure you look into those and put it in the right place. Items accounts. Again, this is one of those things that when we talked about when you're coding your items and what kind of account that you're giving it, if you put things to the wrong places, then it can really mess you up. So for example, this is an item for landscaping materials. And you can see the bottom two have, it's usually the income account and the cost of goods sold and then the inventory account. So you always want an income account when you're doing the sale, so that when you create an invoice, it creates the sale and your income. This first one, the half-inch line, is incorrect because it's cost of goods sold, and that should be over here in this column with the other cost of goods sold, and this should be the same. Now, it could be a different income account. Some of them are different, but it's going to be an income account, not a cost of goods sold. So you can run the list, just run your, and then you can customize the columns so that you can see what different categories you want to look at to check. And sometimes you have to make sure you put in income, cost, inventory account so that it'll show when you run this report. Okay. Go ahead. Okay. Where was it? I think you gotta go back a slide. Customer, there we go. Customers and vendors, we talked about being able to merge duplicates, separating them when they're with the same company, and using other names instead of a vendor or customer. So what I'm talking about here is that within QuickBooks, it doesn't let you have the same exact name for, say, a customer and a vendor. So say you have somebody that is a vendor of yours, but they're also a customer. And you can put all the same information, but the name itself has to be distinguished from the other. So they recommend a lot of times that you put, say the name of the company is XYZ Concrete. They buy from you, they sell to you. So you can put in XYZ Concrete -V, XYZ Concrete -C. That tells you it's a vendor or a customer. so that it differentiates when you go to use that. Whenever you're doing transactions, you want to make sure you're using the right customer or vendor name, not one that belongs in the other categories. There is a place there that you can have other names instead of vendor or customer. This usually includes employees, things like that. You don't see it as much as you do just the regular customer vendors, but it is an option there if you need to have another type of list. But it's one of those things you can run a list and you can go in there and go, oh, okay, that's the same person. Let's merge that. Or they haven't bought from us in years. Let's go ahead and make them inactive so our list isn't so big. Cleaning up that list sometimes can be a chore, but if you do it regularly, you can always reactivate them if you need to, but then your list isn't so big to pick from all the time. Okay, go ahead. So this talks about that very thing, merging the duplicates. You've got this in here as, say, a vendor, and it's in there twice. So we want to make sure we merge them so that all the transactions are under one place and you're not looking in more than one place to see all the different transactions for that vendor or for that customer. But all the transactions come when you merge it, so it ends up in one place. So it'll tell you that you can't, when you go to add something, it's going to tell you it's already in use on this list. So you can't, so you have to append it, like I was talking about, appending a letter or number to this name to differentiate from the existing name. So I always recommend to people, put the -B, put the -C. If you don't see it at all, it may have been marked for deletion or made inactive, and you can always go in and reactivate that if you need to. When you look at the payment settings for that vendor or customer, the print check field as will be used on checks and forms. So that can be different than what the vendor name is. So just pay careful attention when you're setting things up, and especially if it gives you a warning. There's a reason it gives you a warning. So don't always ignore those, because there's it may be something that you need to look into. Okay. So, oh, wait a minute. Okay, we're on that one. Okay, so there's some other things that I recommend that you review early. You review annually. Some people don't do it annually. They may look at things semi-annually. Employees is the first one. You go to the next slide. So this is something, when I have run large organizations and large staffing, I look at that. Is my staffing level appropriate? Do you have an organizational chart? Who reports to who? Who has what task? A lot of times this gets lost, especially in bigger companies. You may have a lot of waste if you're not paying close attention to what your staffing is. Are the employees being productive? Do they have enough work? Do they have too much? For our organization, ours is based on how many clients we have and who's coming back to us, and how many projects do we have. But a lot of times it may be something that's as easy as an office staff that's doing accounts payable, accounts receivable. Well, sometimes you don't necessarily need to split that, because it may not be enough work for one person to just do one thing. So you kind of have to look at those things occasionally to make sure that someone is, one, not just being really slow to make their day look productive, but that it's not costing you excessive money to have extra people there working for you. Have you done an annual performance and salary review? When's the last time you did that? I know that from managing hundreds of people over the years, it's real important that people get a feedback on how they're doing, and looking at, is their pay appropriate? This is something that we try to do on an annual basis. We generally try to do it when they first start doing like a 30, 60, 90, but annually, I mean, I've had people that have worked in companies 20 years and never had a performance review. Those are things that are important to people. It may not be monetary on a performance, but they want to hear how they're doing. It gives you an opportunity to talk about things they could work on too. So if you haven't got a system in place to do that on a regular basis and put it in writing so that you have it in their file, you can refer to it the next year when you go to do it. I would suggest you do that because it's something that employees really want to know that people are caring about and that they're reviewing. Are the employees getting the support they need? You know, sometimes people get thrown into positions and they have nobody to go to. So you want to make sure that, especially when you're a manager, even when you're a manager, you might get thrown into a manager position. You have nobody to go to. So are these employees getting the support they need, or do they feel they're just left out on an island by their own to figure it out? So when you're doing those performance review, you know, those are questions I ask. You know, are you getting the help you need? Is there what can we do to help make you better, help you do better? Those are really important things that they need to know, and you need to know as well. Right now, everybody knows how important it is to retain your employees. Employees can go everywhere, and jobs are everywhere, especially, you know, now with the way the world changed after the pandemic. So many people are working from home. Companies are hiring people to work from home. So you want to make sure that you're doing what's important to retain those people, those employees, because all the things I talk about above, they're real important to them, and they have to feel like you care. And if you don't make these employees feel like you care about them as an individual and as a valuable member of your team, there's too many options out there if they're not happy. So employees can make or break your company. And I've watched over the years with bad managers, people walk away because they can't deal working for that manager, or they're not treated correctly. And, you know, that's all people want. You know, nobody wants to have a job that they hate going to and that they feel like they never are good enough and they never make anyone happy. So these are real important things to me to make sure that you're doing on a regular basis. Next slide, please. Contract reviews. Do you have contracts with vendors and or customers that are time sensitive? Examples of this would be, say, a uniform company. Some people have contracts with uniform companies, or linens and rugs companies, things like that. You want to make sure that I keep all these things when I run a business individually. I keep these things on a spreadsheet so that I can put it on my calendar to know when I need to review that, or when I need to make sure that if I don't want to renew this contract, that I have, one, looked into alternatives, but two, maybe brought it up to the vendor or the customer that, hey, we need to talk about this before we re-up. These, you know, you can find that if you don't review these periodically, and sometimes they're auto-renew. And if they auto-renew with terms you may not still be in agreement with, you're kind of stuck. So make sure that you're looking at these things. Can you get a better deal? If people think that they have you exclusively forever, they sometimes will get lazy and they don't pay attention to what they're pricing you. They don't pay attention to maybe what they're charging you for. So it never hurts to put certain services out to bid to see where you can possibly save money. Everybody wants to save money, but you also want to get what you pay for. And I'm not saying take the cheapest deal. Make sure you're getting the best deal that you can. Next slide, please. Looking at your key advisor relationships, I think I have found in the last 2 years especially, we've had so many people looking for people to assist them with their business. And one is your banker. You know, make sure that you have a good relationship with someone at your bank. If you do and you get into issues or you need loans, things like that, they're going to be more apt to assist you and be right on it to help you if you have a really tight relationship with someone at your bank. I realize people come and go, but over the years, I've been able to establish really good relationships with the people that my companies did banking with. And it was always helpful to have that, because if I needed to call on them for anything, they were always very willing to get right on it. Make sure that your bookkeeper, if you hired an outside services such as out of the box technology or any other service as a bookkeeper, that you have the right one. We get a lot of clients that come to us saying, my bookkeeper didn't do nothing. We don't know what they did. Everything's a mess. Make sure you have the right one. You need to be reviewing this or have someone reviewing for you to make sure that it's being kept up correctly. If you're paying a CPA company, sometimes have bookkeeping divisions. If you're paying them to do bookkeeping and they're not keeping it up for you on a monthly basis so you can know where you are as a company, that's not necessarily the kind of bookkeeper I would want to have. we have a recurring team that does monthly, quarterly, annual, but we have people that we do monthly bookkeeping for, provide them monthly statements so that they are aware of exactly where their company stands. I have other customers that will go, oh, I could do it myself, and then 6 months later they have done nothing. If you're a good business owner, these are things that are really important, because for one, if you don't know how to do it, either get trained on how to do it or find someone that can do it correctly for you and teach you how to understand to read the reports. Because when you don't have that, it can cost you so much more money down the road. So make sure that who you're working with is responsive, is doing it correctly, that you have good communication with, because it's just really important if you're hiring outside services that you have that going for you. CPA is another key advisor relationship. CPA, I have a lot of people looking for CPAs. Many of them stopped taking clients. They got so overwhelmed, or they decide, some companies that are big decide, well, we're going to only do small companies anymore, or we're not going to do small companies anymore. So they're looking for a CPA. Vet your CPA. Ask for references. Some CPAs are not good. Just because they're a CPA doesn't mean they're good. I think the best CPA is someone who actually looks at your reports and questions them if they have questions. A lot of people, CPAs I've seen, just take the reports and file it. They don't know if the reports are right. They don't make sure that things have been reconciled. They don't look at those things. So these are questions that you want to ask when you're trying to hire a new CPA is, are you going to do this for me? What's your process in how you do my taxes? Because if you give them erroneous reports or incorrect reports, you're going to have erroneous tax returns filed as well. So those are real important. I know that people ask us for referrals. We've been working on trying to build that and possibly build our own CPA division or tax prep division so that we can be a one-stop shop and you don't have to go anywhere but us. Business coaches, a lot of people have business coaches that will go through and look at their business and give them advice on maybe things they could look at differently or how they might want to do things differently. We provide a little bit of that with consulting. With our higher level executives, as like myself, we've been in business for so long, we generally can look at something and be able to advise you. But there's people out there that specialize in business coaching, especially when you're going to the point where you're maybe getting ready to sell, or the succession is going to be handed over to, say, a relative. You're retiring and your son's taking over. There's certain things that have to be done. Those coaches can help you through those things. An employee benefits advisor, different people handle their benefits differently, but I always had someone that would do a lot of the legwork for me. And I would say, I want to get 5 different bids for my health benefits and see what we can come up with. So they can, usually those health benefits can cover everything from health, dental, all the disability, all those type of policies, to 401k, to those type of things. So make sure you have people that are working for you and not against you, and not just trying to make a buck. Service is key. So it is for us as well. And if you don't provide good service, then to me, it's a sign that you're not living up to your end of the agreement. So those are things that are really important to look at. Okay. Here's our question time. So if you have questions, I think she has you put them in the chat, maybe?
Yeah, you can go ahead and chat those out. Nobody has the ability to speak since this is a webinar, so you'll have to chat them to us. Given that there aren't any in the queue at the moment, I just want to thank you, Vicki. That was a fantastic presentation, especially this last portion where you talked about the value of continuously evaluating those key advisor relationships. It's so important as you grow and scale your business to kind of think of those as like a strategic hire, someone who works on your team, who is helping you grow your business. Just some really valuable information. So thanks so much, Vicki. Great job.
Thank you.
You're welcome. All right. Well, if we don't have any more questions, we can give you back 15 minutes of your day. In the event that you do have some questions, you can feel free to reach out to Vicki or myself, or to this email address, hello@outoftheboxtechnology.com. Thanks again for joining us. Thank you, Vicki, for sharing your expertise. That was fabulous. And just as a reminder, the recording will be shared with you within the next 24 hours, along with the slide deck and a checklist that we'll share for you, just so you have it in front of you. And please feel free to reach out if you have any further questions. Just a reminder that we look forward to seeing you if you have the chance to register for our next Tech Tuesday, which is next Tuesday, October 10th, on what's new in QuickBooks Desktop 2024. Registration for that webinar will also be included in the follow-up email. So have a great day, everybody. Thanks again. Thanks, Vicki.
Thank you. Have a good day, everyone.
All right. Bye-bye.